Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? Hope you're having a good day. This is a quick stock market update show that we do. We call it the Closing Beat to go over the stock market. I say that every day. I can't seem to figure that out. We're going to do the same today, but I will ask you to keep an open mind today because I got a little carried away. We're going to do something a little bit funny today. Hey, there's no show tomorrow, right? In vacation mode. I've been in vacation mode. And so that started last night, yesterday, where I thought, hey, let me come up with something a little bit crazy for the show today. So hang in there, right? We'll get there. It's going to be a little bit unique, but there will be no show tomorrow. We'll be up in Sandusky, riding roller coasters, having a good time there. A little bit rainy here. Apologize if there's any noise that comes in as we're talking, but we're going to plow ahead and get this thing done. Let's talk about the stock markets here today because we saw a little bit more weakness, right? A little bit more weakness out there. It's typical. It's seasonal. This is what happens this time of year. If you look at the performance of the stock market off to the right-hand side of your page there, it's a little bit off, but we'll go over here and take a look. The Nasdaq was your worst performer today in terms of pullback, getting below the 50-day again in this chop zone. I keep mentioning chop zone. That's what we've got to deal with. That's what you have going on here. We've officially hit correction territory, which is just a fancy way of saying from the highs to where we hit lows today, that'd be over a 10% pullback. So if you like the idea of a pullback, you got 10% there. It is right there at the lows today. We'll see if there's more to be had overall. Remember when the Nasdaq was up 40%? And, excuse me, on the Closing Beat show, September 8th, actually, I covered this for you here. I'll pull up the slide if you want to go back September 8th and check it out. Here's what you got. We talked about the stock market, the Nasdaq being up 40%, saying it's kind of odd. Right, it's not something that normally happens, so you know that this momentum will have to end at some point. September 8th happened to be the day that we showed you all this good stuff in here to show how many other times was the stock market, the Nasdaq, up 40% or more as of September 8th. We use that day, not to say for the year, but up until that point. How often did it gain that much? And there was only 2 times that it ever happened there. And look, I mean, it's something that doesn't normally happen. The fact that we're pulling back here and we're up about 28, 29% at the moment is actually a good thing because the year's not done yet, right? So we get a pullback and we have a reason to put more meat on the bone for the bulls that want to take a shot at buying the markets into the end of the year. So just know that when you see the stock market doing really, really well, that doesn't go on forever. There has to be moments of a pullback, and that's what we had one step ahead of you for you guys here on the Closing Beat if you've been watching. Let's look over at the S&P 500. Really, you have 3% more to go before a correction here. That would mean you have a 7% pullback as of now, not quite as much as the Nasdaq there. Though the big cap tech stocks were the ones that weighed on the market today, it's kind of hard to pick on only those. See, there was a kind of broad weakness there. You go into retailers, you can look at things like Nike. They were weak on the day. It's a strong stock, just happens to be pulling back a little bit. Your banks were weak today. I'll use Wells Fargo as an example, 2.3% down day. Not a big deal there. Communication services, you got Charter Communications pulling back a little bit. Some of those stocks, I think Disney was weak on the day as well. Yeah, a little down move there, 1.5% for them. Not a big deal. Consumer staples, they were weak. Philip Morris pulling back a little bit, 1.4%. Just broad weakness in the S&P 500 aside from industrials and materials. They were kind of weak, but still they stood out as the areas today. Industrials and materials were the strong sectors. We'll cover that in a second. If we go over to the Dow, you can take a look there. A little bit of a pullback on the Dow, not quite as bad. This one stood out as one that held up. In fact, it was the best performing area of the major indices here today. Salesforce was the drag overall, down 2.4%. It's a big stock. Remember, in the Dow, the higher price the stock, the more weight it has. CRM is a new addition to the Dow, and it's a higher price stock. They took out lower price stocks. Did a whole video on the FinTips thing if you want to check that out there. That was the biggest drag. Goldman Sachs was the second biggest drag, pulling down financials as well if you happen to be taking a look over there. You got McDonald's, Home Depot. These stocks were some of the weaker ones out of the group. Just wanted to point that out. It wasn't all bad though. You had Dow. This is one that we pointed out before. Dow back to almost hitting highs there overall, but not too bad, right? You have industrials in the Dow and elsewhere sticking out as strong. You got Caterpillar. We happen to own that one. That one hit new 52-week highs. Looking good there. And sticking with the industrials, 3M. These are boring stocks, but they're doing really well, right? I'm going to point some of these out here for you a little bit later. Our FinTips videos this week and next week going to be really interesting. I don't know if you had a chance to check them out, but earnings stats we talked about on Monday to explain what they were and specifically why we use them. IRS updates we hit you with yesterday, and tomorrow we're going to break down financial planning in terms of your head, like what do you plan? And that's sort of a precursor to what we're working on here at Jazz for our customers, something really cool where we can kind of break down how to plan for things and actually get help instead of just saying, oh my God, I have all these dollars and things going everywhere, what do I do? Wine and wealth class tonight. We've already maybe just got a little bit of a head start there, but our wine and wealth class, it's a class we do for customers on Thursday nights in the speakeasy over there. And what we do is we cover, ways to teach you about your dough, right? Have a drink, come hang out with us a little bit and learn a little bit. That'll be tonight at 8. We're going to be talking about nest egg, going over updates and some planning tricks and things that you can do. Hope you enjoy it. Yeah, sometimes it's called Whiskey and Wealth or Moscow Mule and Wealth. Just depends on the night, really. All right, and our research site, I hope you'll check that out. If you can't be a member of Jazz Wealth, our research site, we've got the ability for you to be a member. It's $13, so you can join us there. That's my marketing pitch for the day. We've got some really cool posts on there, including the Nasdaq. We talked about the Nasdaq having a big problem here. Where was it? There you go. Stocks most likely to fail in August. We talked about Nasdaq's new problem that it was having there. So if you're one of our research members, you can check that out. Or if you want to be a part of that, that's cool too. Yesterday, we talked about net exports. I put the full list up there for you to check out. That's what I have for you there. Let's go over to the sector breakdown, and I'll stay right here with this. Let's go, just stay on this chart, because I want to get to the cool stuff. This is going to be the coolest thing. We'll talk about it in a minute. Okay, let's just go. Let's go. All right, real estate pulling back here today is teasing you. It was doing all the right things to break out, and today it pulled back. In terms of our portfolios here at Jazz, we manage our own portfolios. These were our underperformers today. That sector was one of the weaker areas out of the group there. It teases, so maybe it's not quite ready just yet. All the stocks in that sector were lower on the day. They were the worst performers in our funds overall. Tech also pulling back, and communication services was with it as well. Weak again today. It's been a theme this week that those have kind of struggled to get going. You got to recognize things like that. In the tech sector, you got Dish pulling back to the 200-day, hinting at maybe breaking below that. Facebook having pretty poor week overall, down 3%. It's down 14% for the month of September. That's kind of a rough rough month for Facebook there. I mentioned a minute ago, industrials were one of the standout areas there. As far as the performance for the day, it was kind of choppy. Finished the day positive, but it was floating around positive, negative throughout the day. FedEx continuing to fall. We talked about that 2 days ago, and where the gap from the earnings would be a pullback gap, meaning a gap up reversal. So that's playing out exactly as we sort of predicted before all of that. That's good to see there. That did weigh on the sector a little bit today. UPS also weighing as well. Yesterday I mentioned this gap up reversal. Not a good sign for the bulls. You don't like to see that sort of thing. And today it's just a touch lower. So I like to see that. Not tooting our own horn. Just if I could tell you ahead of time, that certainly helps than finding out as things happen. Doesn't it now? Right? Basic materials higher on the day, 0.75%. This was the best sector of the day. From last Friday, we talked about some of the stocks. Oops, no. Some of the stocks in the industrials like Lyondell. I say Lyondell. From last Friday. This is a breakout we talked about. That one's going well there. Dow Chemicals, or Dow they say now, already continuing. Remember, this one's beating Apple and Microsoft. Look over the last 6 months. This stock is starting to wake up there. It's one that's beating. Just mention it again. And then Mosaic, I noticed today, happened to break out. Not bad. It's kind of cool. It's one that's been quiet for a while. Got a little breakout there in the industrials. That was it was the best performing sector for the day. Financials, this is just, you don't like to see the financials being weak there. It's now 20% off the highs. It's the second worst performing sector year to date there. The worst sector is energy, by the way, down 41%. So if you like your discounts, you got a 41% discount going on there. Let's go to new highs, new lows. I think that'll work. Taking a look here, a couple interesting ones. Caterpillar, we mentioned, we happen to own that one. That one made new highs. Oh, our little screen, there we go. John Deere hitting new highs as well, looking good. There you go. Trane Technologies, we happen to own this one. We're happy with this one lately. We had to suffer a little bit. This was a tough one. These are the air-conditioned guys. Nice move today, 2.3% there. Actually, since we bought it, we're up 47%. So if you happen to be one of our customers, there you go. Looking good there. We got Eastman Chemical as well. This was the good areas today, right? You notice that all of these are industrials or materials names. So they're not the exciting stocks, but they did well today. Eastman Chemical, we happen to own that as well. Now we're up 14 plus 3% on the day. So looking pretty good there. Happy with that one. And the other notable one I thought was FMC. If you're looking for an idea here, it's not an exciting area, but it's a nice strong stock doing really, really well. And I have no complaints about that one there. There were no new 52-week lows, so nothing going on there. Okay, hang with me for a second. I was reading through the comments the last couple nights, and you guys are too nice, right? There's just a lot of nice comments there, and I get it. We're not really sharing opinions so much. We're sharing stats. It's kind of hard to take the opposite side of a stat that might prove you wrong. But what makes a good market is people being able to say, I disagree, and they would be the sellers or buyers, and the other people that say, I agree. Someone thinks stock's going up, someone thinks stock's going down. Well, then I took it further. This was a long night, by the way. And I said, well, how does people come up with strategies? Like, who determined that a breakout is a reason to buy a stock, and therefore when something happens, you buy the stock at that point, you get out if you're wrong, and therefore it's a profitable strategy. So I started thinking, what is a strategy? Like, how do I get you guys to think, to open your minds? If you can develop a strategy, then you can have a trading plan or investing plan. You can measure your strategy and see success or failure. Well, there are strategies of all different kinds there. There's actually strategies on the seasonal migration of African elephants. People invest based on that. Solar alignments and things like that. There's a strategy where people study, it's an algorithm, but they study, I've shared this with you in the past, hedge funds studying the parking lot traffic in Walmart, right? And then they try to make guesses based on sales there. Well, that's a strategy. Is that a stupid strategy or is it a good strategy? I don't know. So what I want you to do is think in terms of anything's possible. And today, I'm going to share something with you that I think most of you might find kind of funny, some of you will highly disagree with, and some of you will be like, all right, I get it. He didn't mean to do that, but he's teaching me something to open my mind a little bit. Are you ready? Okay, here we go. Hear me out, right? Let's go over to this here. I'm going to just pop this up. Oh boy, this is probably going to take me down. Okay. Humor me for a second. If we take the S&P 500 and get rid of all the different classes of stock and we categorize them by their ticker symbol, what is the letter that it starts? On the screen, what you see is there are 55 names that start with the letter A. Apple, AMD, you get the idea. There are 20 names that start with the letter B, so on and so on, you go all the way down. The only name that starts with Y, I believe it's Yum Brands. It's got to be Yum Brands, or because that's in the S&P, so it's probably Yum Brands. All right. Okay. The question is, do stocks perform better because their ticker symbol starts with a letter? That's all. I just wanted to know. Like, what if we compared the performance just to see? All right, here's the year-to-date performance of each ticker symbol based on their starting letter. So A, up 4.2%. If you built a portfolio of only stocks that were made of the letter A and you invested year-to-date, you'd be up 4.2%. All right. If you built one made out of Qs, actually there would only be two names. It'd be Qorvo and QCOM. But you'd be up 22% if your portfolio only consisted of Qs. Hang with me. Come on, just give me a second, all right? So if you invested in only names like Halliburton, Hasbro, things like that started with the letter H, you'd be down, you wouldn't be very happy. In fact, many of the areas here, based on only investing in the ticker symbol, you'd be down, right? So I thought about going into different sectors and stuff and seeing like what the weights were and everything, but that didn't really make any sense. So I said, let's go a little bit further. 5-year annualized returns. Let's just see if over the long run, you would have been better off with something. So if you invested in stocks with a ticker symbol letter A, you'd be up 14.7% a year. You would have averaged a 14.7% annual return by doing that. If you only picked H, that would be the worst performer again, so not looking good there. You'd only be up 1.3%. If you picked Q, there's still the two names, you got 18% average returns, that would have been the best. All in all, that gives you just something to look at, right? What we're doing is saying, is this a strategy? You can probably guess that there's a lot of flaws already in this strategy. Q has two names. It's not a very diverse portfolio. It's certainly possible. A lot of you just buy Tesla. I see you, Harry. But is it a strategy? So there's flaws. I get it. But we're just trying to get you to open your mind a little bit. We then took it a step further and we said, based on the popularity of the letter, does the performance change? In other words, if you know the old thing, RSTLNE, right? If those letters are more popular in the English dictionary, is the performance better in those? So what we did is we actually plotted the the popularity of each letter. In other words, how often is the letter A used in the English dictionary? It's 7.8% of the time. How often is the letter B used, etc., and went all the way through the thing there. The green ones are the above average letters. You can guess, R, S, T. I thought it was funny that L wasn't in the mix, was it? No, L is not above average. But other than that, the green ones are the more popular letters that we use in the English dictionary. Okay, so then I thought, well, let's see if we only invest in portfolios that are made up of stocks with the ticker symbol that are used more than average, and we built a portfolio. And then we said, let's build a portfolio of the stocks with letters that are not used as much. Maybe there's some psychological thing there. I don't know. So we took it a step further. This is where it gets interesting. If you only built a portfolio of those green bars from the previous one, your average annualized return over the last 5 years would be 8.82%. If you used below average letters, like the ones that we don't use very often from the previous slide, 7.3%. The average performance across all of them together was 3.83%. So I thought that was kind of interesting to see. You actually did better than the average. You didn't do better than the market. You're not supposed to in this case because you're breaking down the market, but kind of interesting. So the more common letters that we use more often that also happen to be ticker symbols that start with that letter perform better than letters that we do not share, right? Or that we don't use as much. So the moral of the story is this is not a strategy, right? It's an idea. How do you just go down a path and say, what is the probability of something happening based on my thought in my head? The only thought I had was, is there a correlation between performance and the ticker symbol, the letter that it starts with? There is not, right? So this is a dead study. There's nothing to do with it at all. But the fact that you're thinking that way leads you down a wormhole to say, there's something here and there. Maybe I learned something, I could start a new strategy. Maybe I can experiment with different things. And so although this is really wildly crazy and something that nobody's going to do, now you know. It's a study on a strategy that is not something you probably would focus on, and you could take it further if you want or whatever, but it lets you know that anything's possible. You can think of any reason to buy or sell a stock. This lets you put a plan together. It helps you identify what you will do and what you won't do, and there you go. Feel free to make fun of me as much as you like. I know that that is not something that is going to be suitable for everybody, or you're not going to get the point, and that's okay. I could take the comments, but that's what I have for you, and I will move on. Okay, lastly, I'll do stocks in the news, and then we'll take your questions. Let's see what we got here. So we'll go with whatever we've got. Stocks in the news. Do I remember the stocks in the news? Yeah, there we go. So you got Herman Miller. Oh, is it up? Oh, stocks in the news. There we go. Herman Miller, there you go. So up 33% on the day. They overall beat earnings by 94 cents. They reinstated their dividend. Good sign there. If you've been in this one, you're looking for the dividend, it's coming back. All is good there. Southwest Airlines grounded some planes. They grounded all their 737-800s. Maxes are already grounded. They were concerned about some of the readouts they were getting on weight calculations. So they're looking at Boeing, looking for help on that. Nikola. It was up 1.6% on the day. Value Act defended the company today. Maybe it helped a little bit. I don't know if they have a position or not, but that was in the news. Oracle was a little bit flat on the day, down just a little bit. Trump came out and said he don't like the deal the way it stands right now, and he was the one that wanted this whole thing to happen, so he doesn't like the deal. What does that mean? How are they going to organize it? It's a hot mess right now, so expect more volatility there. It's down to Oracle and Walmart, by the way. Microsoft obviously isn't in the game. Uber. So you got Uber that they're looking to sell a piece of their company, one of their Indian companies there, and so that was what was moving the stock there for the day. I want to now take your questions and see what I can do before I do that. Let's see. DTE Energy paying out $1. You got Tiffany's paying out 58 cents. World Wrestling paying out 30 cents. And next week we get a few names added into the S&P 500. Can I move this guy? No, I'm not going to move it. I'm not going to move it. I love it. Oh, we know what Harry's doing. We're cheering you on, buddy. Come on, Tesla. My mind goes like a mile a minute. Yeah, that's true. And then when it goes that way, it's like, okay, how do we get all the information and see if there's something there or is there anything there? We'll see what happens. Yep. Any concerns about someone holding QYLD to generate income? Is there a comparable position to study that has a longer history? Yeah, it's not the longest. I get it. There often is comparisons from using the QYLD to the names that are the covered call ETFs. I see a lot of studies like that where they'll say, what's the difference? Like if we're going to give up the upside, of course, or is it better to have the QYLD? So if I was going to do any study, I would compare the covered call ETFs, there's a handful of them these days, versus the sort of the lower volatility dividend ones, and see if there's any way to do that. Do you benefit more on the upside by not having the calls sold against the positions? That's probably what I would look at if you're looking at something geeky there. Yep. What's the best time to talk to you about being a customer if we have debt when you get most of the debt paid off? Depends on the debt, right? Some people are okay with car loans and home loans. Those are respectable debts, right? Lower yield, lower interest rates and all that. Credit cards, I mean, some people are okay doing the whole game where you pay it off and stuff, so you might carry some debt, you pay it off, you get rewards points or whatever. So it really depends. If you're kind of swamped in student loan debts, you're swamped in credit card debts, Well, then the strategy really has to be, if you're going to invest, how does that like tertiary, not even secondary, how is that an afterthought to just move the needle a little bit, but really the debt is the focus. So you don't certainly want to commit to something when you're paying more in debt. On a balance sheet perspective, you're just not going to make any money. Makes it too tough there. Yep. Dustin is just trying to prove there are a lot of stupidly based strategies. Well, yeah, there's just a lot of ways to look at it. Think about it. At some point, somebody said, stock is going sideways. When it then goes above that range, I think it's a buy. Somebody had to make that decision, and maybe they were thought as being silly. Or there are all the candlestick patterns out there. The Japanese candlesticks, they came up with all that. Well, is that good, or you know what I mean? Like, is that a mess or what? So there's a lot of platforms that can study all that stuff, but at some point you might hit on something. We used to teach, when I used to teach traders, we used to make them sit and wait for the first 15 minutes, and then we came up with a 15-minute strategy. So after 15 minutes, what do you do if you're day trading or whatever? And so we came up with a whole strategy. We measured it. Turns out it worked for a while. So it was something to get people focused on. I mean, you can get stuff that your mind is focused on. You then don't have to worry about emotion. You can say, I like this idea. I can justify performance to at least test it out, maybe tweak it and things like that. Yep. I like it. I love it. Oh, Dave and Buster's. Oh, man. Yeah, those poor guys. Great place, by the way. It's a fun place to be. But Dave and Buster's getting that reversal today, 26% down. Worried about bankruptcy there. Analysts coming out saying bankruptcy is a real concern. But then you have other analysts coming out saying, it's an overreaction, right? Yeah, going through a tough time. I think they're definitely going to lay off people. I saw that one this morning. They're laying off some amount. They may close some stores and stuff. That'll be the start. They won't just jump right into bankruptcy, I wouldn't think. They're going to lay off 1,300 employees. That's what it was. Yep. Bankruptcy is a consideration and all that stuff. Yeah, you don't like to throw around the B word when you're trading there. CanSlim, that's a great one. Yeah, CanSlim. There's their strategy. That's their belief system. That's what they look for, and then they decide to buy. They've got a very fixed stop loss, 8% right in there. So that's a strategy. Someone developed that. Well, you know who developed it, but they put that together. It works, right? So got to do that. I love it. Is this a new portfolio? No, we're not gonna do that. No. And it wouldn't make any sense to do, and now you know why, right? I love it. Are you teaching us as active traders or long-term investors / traders? It could be anything. That's the thing. Some of you are trading for today or tomorrow, and so I'm trying to help with just day-to-day stuff. Look at Harry, right? Harry's in there with Tesla. That's his game plan. All right, I'm sure he's got his, ideas for if it goes up or down or what happens next split or something like that. He's a long-term investor. Some of this may be interesting, but he's not really going to do anything with it. Really depends on where you land. Some of you are only using options. I've heard from some of you. I know what you're doing there. So it really depends on where you land, and that's okay wherever you land. The only wrong way to do this is the way that loses money. So I try to speak with everybody in terms of, knowing where you're at, short-term, long-term, things like that. So we try to bounce around just a little bit. I love it. Yep. Don't beat me on this one, but is there a strategy where you see grouping companies based on CEOs' religious beliefs? Yes, there actually is. There's a whole new category of investments out there for people that want to be environmentally conscious, right? They're not interested in maybe things that hurt the environment or are seen as providing to climate change, if you're into that thing. There are religious-based beliefs. Actually, when you open an account with us, we actually have to ask you, is there anything you want us to avoid? Do you not believe in gambling, alcohol, tobacco, pornography? It could be anything, and you have that chance to say, I'm a greenleaf, right? I like the idea of supporting the environment, but I still want to invest. I want to make some money, and so we have to exclude those by law. Any brokerage or any advisor has to do that. All right. I appreciate you guys watching and putting up with me today. It was a little bit different. We'll get back to the goods next week. Remember, no show tomorrow. Be out of town, taking the day off. So I appreciate you guys just watching, supporting us along the way. There will be the video, the financial planning video, so enjoy that. And we'll be back Monday to do this all over again. Have a great rest of your day, and thanks for bearing with me today.